With the money market action where the rupee is in a free fall, the Indian currency weakened further to hit a fresh all-time low in today's trade. Several other Asian currencies also weakened as the dollar index surged. The rupee recorded its steepest fall in nearly 2 years, making it the worst performing global currency today. $1 now costs 86 rupees and 50 paise. Indian bonds also came under pressure as 10-year yields spiked. And Latha Venkatesh is here with the details. Latha, what drove this sharp depreciation?
Well, first, for the record, some records were set today at 0.7% fall to 86.58 thereabouts, the intraday low. This is the sharpest fall that the rupee has seen in 2 years. And this is also one of those rare days when the rupee has underperformed all Asian currencies. The baht, the Filipino peso and the Malaysian ringgit fell between 0.3 and 0.6% to the rupee's 0.7%. The yuan actually appreciated a wee bit, just a wee bit, largely steady. But the rupee clearly stood out for its, underperformance. The key reason, of course, has been the way in which the dollar has surged. 0.43% rise in the dollar index on Friday because of the very strong jobs data. But the point is that in previous instances, the rupee did not underperform because the Reserve Bank came in and stepped in with a lot of dollar supply. This time, the Reserve Bank's role was a bit, muted, you may say. They were apparently supplying dollars, but they were moving with the market. There was no effort to protect any level or come in aggressively. The sale was largely by FPIs because you saw the stock market fall, but not entirely. There were already people sitting with long rupee positions and they were just making more money. It was also a speculator's field day because the Reserve Bank was not protecting 86, not 86.25, not 86.50. So people are at a loss to give us any new level. We got a level from Standard Chartered for the year end at 87.75. The intraday moves are really difficult to guess because you really don't know how the dollar index will move, nor do you know what the Reserve Bank may do. It's possible that because there are too many rupee shorts in the market, they come in tomorrow to protect the rupee. But at the moment, it looks like the rupee can fall further simply because the global dollar strength has not stopped. As well, today the rupee closed at the lowest point of the day. Very quickly on bond yields as well, you saw the yields rise. Even as the US yields rose. So Indian 10-year bond rose from 6.8 to 6.84. But more importantly, the call market, which is the one-day money market, banks borrowing from one another for just 24 hours, that market saw the rates surge to 7%. That should logically remain at 6.5%, which is the repo rate. But clearly, there was a liquidity shortage because the Reserve Bank is supplying dollars for so long now that there is a liquidity shortage. Of course, Reserve Bank supplied some 50,000 crores through a variable repo rate auction. But the yields are moving up because US yields moved up very sharply. The 10-year in the US moved by 7 basis points on Friday and looks like the Monday trades are also going to be higher in terms of US yields. Likewise for the US 30-year yields over 5%. Now, a big point is the market is taking off bets of any Fed rate cut. For instance, Bank of America thinks there is no Fed cut at all in 2025. And a similar sentiment is playing in the Indian market. A couple of banks, HDFC Bank and Standard Chartered, told us that they are not expecting a February rate cut. That's the market's position. In fact, the market, if you go by the derivatives market, the overnight index swap market, it looks like they're not expecting a rate cut from the Reserve Bank all the way till June.